Hello, you're watching Proactive London. I'm joined by Han ETF co-founder and co-CEO Hector McNeil. Hector, we're focusing on growth in active ETFs today. Now, ETFs started as passive investment trackers. Why the explosion in active strategies?
Yeah, it's a great question, Stephen. Nice to see you again. I suppose it's really just the next evolution of the ETF market. I'd say the passive story was the ETF 101. Then we started to see the growth of things like smart beta, thematic, which are more of an active bet. From an investment perspective, something like a defense ETF or uranium. It's quite a specific exposure. And I suppose the next stage after that really is the active world. And I think what's driving that is basically just the attractiveness of the e-commerce story in the ETF world. The fact that you don't have to fill a form and send a check off and wait a couple of days to get your price and get your stock. You can just go on the exchange through your Hargreaves Lansdown account or AJ Bell or Invest Engine, and you can go and buy the stock, the ETF you want and add it to your portfolio. So and I'm also seeing massive trend in the US as well, which we tend to follow the US ETF market sort of 2 to 3 years behind. And what's happened there in the last 2 to 3 years, 75% of all new ETFs have been active. And I think something like 25% of all AUM flows have been active as well. So we tend to follow that their lead, and we're starting to see that, across the board in Europe.
Hector, is there a tax advantage to an active ETF versus a mutual fund?
There is, and that's one of the major drivers. So if you have US equities in your ETF and it's Irish domiciled, so that's as opposed to a Luxembourg domicile, they don't have this feature. Ireland has this uniquely. You only pay 15% withholding tax on your dividends and your income. Whereas if you held an Irish UCITS mutual fund or a Luxembourg mutual fund or anywhere else, it'd probably be paying 30% withholding tax. So if you've got a 2 to 3, 4% yielding portfolio, that's 30, 40, 50 basis points of alpha that you're giving up by not having an ETF wrapper. So that's driving a lot of change as well. And active managers will tell you, even 10 basis points of alpha will be hard gained. So that is driving the story as well. So it's a great advantage from that perspective.
Hector, you mentioned that Europe is playing catch up with the United States, where 75% of all new ETFs are active. Are you seeing opportunities in that space? And tell us how you're taking advantage of it.
Yeah, again, a really great question. I think, probably if you asked me this question 18 months ago, I'd say we'd be getting 1 or 2% inquiries, from quite esoteric, sources in the ETF space. We average about, a couple of inquiries a day, believe it or not, over a couple of thousand since we launched Han 5-6 years ago. And I'd say we're up to about 40% now on active. And it's all the major players. I mean, I can't be specific because of confidentiality, but, I would say, the top 20 asset managers in Europe who haven't entered the ETF space yet are very actively looking at it, pardon the pun. And you probably saw 2 weeks ago, we announced that Guinness Global Investors were going to be one of our first to join the platform. So, they're a pretty well-known traditional active manager. So I think there'll be more to come. I think at the moment we've got about 7 or 8 products at the Central Bank of Ireland, which you can say are true active. And I think that's going to be sort of like a bit of a domino effect, for more managers coming down the road. I think what's really neat about it is I think people are sort of figuring, in the past, I'd say a lot of traditional managers have been put off about competing with Vanguard or iShares, on the indexing side, because that's really a scale and a feed game. Whereas, the active world's a lot more about IP and content and branding, so the door's wide open for that from a competition perspective. And I think on the flip side of that, why people are going down the white label route is they sort of probably only want 5 to 10 strategies over time, which doesn't make sense to build out your own infrastructure, so renting or incubating with someone like Han makes a lot of sense for these guys. 8 to time to market, we're 10 to 12 weeks. Versus if you set your own organic ETF business up, we reckon it's a 2 to 3 year journey. And then probably another 3 to 5 years to figure out what you should have got right in the first place, but got wrong, which is pretty hard to model. So we're finding a lot of people coming to us, with the intent of getting something out pretty quick, and 10 to 12 weeks is great. The other thing you got to remember, if you are doing it organically and it's a 2 to 3 year to get to the start line, BlackRock is between 50% to 100% bigger, when you do get to that start line, just based on their growth. I mean, interestingly, I saw an event at Bloomberg last week where Eric Balchunas, their major ETF analyst, was in from the US, and he's estimating that the global market will rise from 11 trillion to 30 trillion of assets in the next 5 years. So, with Europe sort of getting up to the sort of 7 or 8 trillion, so that's a 4x growth in that period. So I don't think anybody wants to miss the boat on that.
Hector, what sort of strategies and asset classes are you looking at growing in the active space?
Yeah, it's interesting because the major success points currently have been in Europe on the active side have been sort of the likes of JP Morgan with sort of systematic equity, which is sort of like half and half active, and half systematic. And then, PIMCO with an early success with fixed income active products. But we're seeing it across the board. I mean, we've got in filing, we've got pure equity sort of concentrated baskets and global baskets. We're seeing fixed income, across the whole spectrum of fixed income, whether that's, general fixed income or CLO, preferreds, convertibles, those types of things. And also options-based strategies, things like covered calls, things like buffer products, capping downside, with upside participation. So a more structured product world. So it's a really across the board, but the common denominator is they're all active, which is really exciting.
So really watch this space to see what you're coming up with next, Hector.
Fantastic. Yeah, no, we're really, really excited. And I'm sure I'll have some more news for you next time we chat next month.
I look forward to that. Thank you very much for your time today.
Thank you very much.
Hector McNeil is the Han ETF co-founder and co-CEO.